So Citi upgraded Thor Industries with a buy rating. Now, for those who don't know about Thor Industries, they are a RV maker, and coming out of the pandemic when economies were shut down and people wanted to get out their homes, Thor Industries saw a boom in business as people did not want to stay indoors. Fast forward to today, and well, what we see is for the month of March, it appears that prices are going to close lower. Now, what I want to do is I have this resistance band at $90. I want to extend that. Now, when you extend that, you can see how price likes to gravitate to this level, right? Support, 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 resistance, should be support again. Now, before we look at the weekly and the daily time frame, let's look at this article. It is coming from investing.com. So last week, Citi upgraded the firm's rating for Thor Industries to a buy from neutral, also raising the price target on the stock to $122. In addition, Citi opened a 90-day upside catalyst call on Thor in anticipation of a ramp in orders. Now, the upgrade follows close on the heels of last week's earnings announcement, where disappointing margins and a temperate industry outlook led to a fall in the company's shares, and that's probably where the down candle on the monthly chart is coming from. Now, the 90-day upside catalyst call comes despite Citi expecting 2 or 3 more months of declines, where they will be keen on the lookout for signs of a positive industry inflection between April and May. Now, while this is not out of line with industry expectations, they believe it could serve as a green light for dealers to ramp orders, for OEMs to gain confidence in their guidance, and for investors to dip back their toes into the Thor story, bolstering valuation, added Citi research analysts. All right, so kind of getting back to the monthly chart, and if I do put a line at the $130 level, we can see why the sell-off, that was due to resistance, support, right? All right, scrolling down to the weekly chart, and when we get to the daily chart, this is probably where we have the sell-off on earnings after a leg higher, consisting of a higher high, higher low, and then a higher high, which came into, again, this is that area that we saw in the monthly chart, resistance, support, resistance. Now, what I like to look for is explosive type volume candles that are above average. And we had one right here, but that's not a good location, right? The extremes I like to play because you have an imbalance between buyers and sellers. So in this case, the buyers outweighed the sellers, and in this case, the sellers outweighed the buyers. Now, for the past 2 weeks, you do have support at the $100 level. So you have buyers currently defending this level. And I'm not going to put it on, but you do have a rallying price basing candles and then a rally out. So there is a level of interest. We have weekly buyers, again, supported by this hammer candle. Going down to the daily chart. And what we can see is this 200-day moving average is serving as support, now resistance. And this is that area that we saw on the weekly chart, and I don't like the price structure. This little pullback tells me that the orders are really below So you had this leg down, rally up, pull back. So this kind of confirms where the orders are, and that's this resistance support level at $90. So I don't anticipate this zone holding. However, as you can see from the weekly chart, price did pause. And maybe it's pausing before the next leg down. Only time will tell. But as of now, there is no setup. Best levels to get long is down at the $90 level. Thanks for watching. Subscribe. Please like the video.